Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, June 5th, 2024. I'm going to start with the short term today, just kind of as an experiment, and then end up with the long term. I'll kind of interweave them together actually right out of the gates. But rather than start with the big picture, I'm going to start with really the day itself. And that is, we've got resistance at this trend line, 179.72, that can contain session strength, and below which this near-term channel bottom at 169.02 is likely over the next 2 or 3 days. And that has been true now for the last 2 or 3 days. Selling really the 179.72 trend line and taking profits, or perhaps going long at 169.02. You can trade both sides, solid 2 to 3 day swing trade area. Now, if we close below 169.02, that sets off a secondary sell signal that should yield 156.25 over the following 3 to 5 days. And this 156.25 formation goes back about a full month now and can absorb weekly selling pressures. And if it can contain weekly selling pressures, there just might contain selling into later June. So this is an important point, an important pivot point as we move through the rest of June and into July. I will add that the overall longer-term dynamic remains bearish by one measure below 190.66 and longer term by a longer term measure below 218.13. And I'll get to that in a moment. But that being the case, that the 1-year trend remains bearish below 218.13, you should probably be a more aggressive seller following settlement below 156.25 than a buyer as you bottom pick this downward retracement. But if you're an aggressive, experienced trader, you can certainly trade both sides. You can bottom pick 156.25 for a possible 1 to 3 week pop to the upside. And certainly if we close below 156.25, I see no good reason to be long Tesla as we move then into July. I think within a couple of months of closing below 156.25, we should revisit that January 23 low of 101.81, which is likely to be tested anyway over the next, I'm guessing, 3 to 5 months, say 6 months, holding below 218.13. 218.13 that, if tested over the next month or two, can absorb buying through the third quarter, and from here we can round back to channel support. That will be, as we move into August, September, converging anyway with the 101.81 January low. So the question is the market going to give you an opportunity to sell 218.13? I'm talking to you big picture traders, the 3 to 5 month position traders who might trade options, for instance. As we approach 218.13, if we do, that's an opportunity to go short the market. That could mean reaching for 102 strike out of the money puts that don't expire. I would go probably a full year out on that expiration. Now, once again, if we were to close in the next week or two below 156.25, I don't think you're going to get that opportunity to sell that upward retracement at 218.13, because I do think that under that scenario of closing below 156.25, we should fall into the very low 100 area, that 101.81 low, within a matter of, that could be 3 to 5 weeks. It could be the better part of 2 months. And that would be the anticipated goal, the anticipated target with a settlement below 156.25. I think that covers the downside pretty well. Just a reminder, if you're looking at this chart, a settlement today below 169.02 indicates a good weekly high, 3 to 5 days bearish continuation then to 156.25. Now the upside I've got, of course, 179.72, and that is our upward pivot point through the rest of the week. So if we do close today above 179.72, and it is once again, by the way, a level that may well contain daily buying pressures. It's performed pretty well over the last 4 or 5 days in doing so, and below which 169.02 remains a 2 to 3 day target. So if you're still short below 179.72 or from this trend line, you're holding out for 169.02. But if we close above 179.72, my suggestion is to exit any short positions and consider going long over the 3 to 5 day time frame. Could be within 2 to 3 days where we test 190.66, where we could top out not only through next week, but perhaps through the entire month of June. I don't anticipate a test of that 217.69 long-term channel top on the weekly chart 218.13 unless we were to close in the coming days, the next couple of weeks, above 190.66. I see no convincing technical rationale for anticipating 217.69 unless we close above 190.66. And if that occurs, then I see no good reason to be short Tesla over the 2 to 3 week time frame. Now, for the 2 to 3 month out of the into later year time frame, it is still a market to be sold. Not unless we were to close above 218.13 at the end of any week. Over the coming weeks, would I see a good low for the year, bullish continuation than anticipated in the 320s. We're a long way from that right now. I am going to leave you with this chart today. Please click like, share, subscribe. Check out wickedstocks.com. We offer a 5-day free trial. I'll be back tomorrow, of course, with Thursday's Tesla report, and you have a great day.